Good morning, good afternoon, good evening, whatever time of day it is, wherever you are. Welcome to today's Friday Fix. Yes, it is already Friday. No, I'm not sure where the week went either. But you join myself and the amazing top drawer lads from AlphaPicks, where we will be going through the major themes that have impacted markets this week. As usual, myself, Alex and Jess will be providing everything you need to know to catch up with what's gone on and what's been moving markets. But before we carry on, I will get the legals out of the way. Nothing discussed on the space of session constitutes trading or investment advisory. If there's any kind of endorsement by PiQ, AlphaPicks, myself, Ryan Paisley, Alex or Jesse. Lads, how are you?
Very good. Very good, thanks,
Good.
Ryan.
Well, that's good to hear.
I'm talking to you through, I wanted to start off actually by talking about AI adoption, because I'm actually talking to you through my Ray-Ban Meta glasses, which I
Well,
picked
do you
up
know
on
what?
Tuesday.
That is very punchy. And also your sound is far better than Jesse's, who, if he can mute himself, because that's really kind of pissed me
Yeah,
off in the background.
there he is.
Yeah. See, like your glasses have got far better quality than whatever Jesse's using, which is probably tops and string, knowing him. Yeah. And we were only talking the other day, right? That we don't believe how many people have really got these glasses, but you're using them.
I got them, yeah, and it's one of those things. Is a friend of mine has basically had them for the best part of a year since they first came out, and he's always going on about how good they are. And found myself in the Ray-Ban shop on Tuesday, and
As you do.
whatever, as you do, and got them. But genuinely, I don't know many people that have them yet, but I can tell you one of the reasons why I feel like AI adoption is still way behind the curve is because these things are actually insane. So
Really?
beyond the sort of obvious one of you can just put them on and
Yeah,
talk as if you're having a,
and they help your eyes with the sun. Yeah,
and
yeah,
they,
all groundbreaking stuff.
they are sunglasses, transitional lenses, I'll add. But you can take pictures with them. You can tap them and record, so you get that POV video recording things. You can, the sound quality, the audio is fantastic. I think it's the same on the other end.
It really is. It really is. Definitely.
Yeah. And I think, how many people, it is still basically next to no one have them or have really even heard of them. So yeah, long Meta.
Do you know
I
what?
think it's a great product.
No, and this show is not endorsed by Meta, and we are not funded by Meta. We'll take some of their cash if they want to throw it our way. But do you know what? I'm in need of some. I'm in need. I know it's the end of summer, so it's probably a bit late now, Ryan. But I'm in need of some sunglasses. And listening to you talk about them like this, because I hold your opinions very highly. I'm now tempted to get some myself.
Do it. And also, if you get the transitional lenses ones, obviously you can just wear them with clear lenses. And I mean, you already look very intelligent, Ryan. But you put these on with clear lenses.
You. With me Stone Island on at the moment. Yeah. Good one. Anyway, enough kissing my ass. What's been occurring this week in market?
Yeah. So aside from AI adoption,
so quickly, are you long Meta?
Yes, yeah, we do hold better stock. Yeah. I'm not sure my financial stake or my purchase will materially move there in next quarterly earnings, but that's beside the point. I want to start off with something we spoke of last week, right at the end of the episode, and we didn't quite manage to get to cover things properly, but it is close to home in the UK, where there was probably one of the most classic headlines bandied around early this week, that the UK 30-year yield got to the highest level since 1998. And that caught a lot of attention from everybody from different segments, because of obviously the higher that benchmark yield is, it translates to higher borrowing costs for the government. And I don't know if you saw this one, because this isn't actually fresh data out today, but of the 20.7 billion borrowed in July, 16.4 billion of that went purely on interest payments to service debt.
It's crazy, isn't it?
Did you know? I had not seen that stat.
I knew like the debt servicing is high, but that is extreme. That is, yeah. That is there's a lot of people love bandying around the phrase unsustainable. This really is, and let's be honest, it's not going to get better.
It's true. And so I think because the other point that I read from an article on this week is that obviously the fiscal uncertainty in the short term is obviously one driving factor why the yields have head higher. But actually, it was making a few interesting points as well, is that you also have the impact of the baby boomers, who are essentially, you're seeing this aging population in the UK, and you've got a big chunk of them who are essentially looking to start eating into their pensions, drawing down off them, which obviously is seeing more liquidations in the bond market to surface this. You've also got quantitative tightening, and essentially the Treasury now isn't, a big buyer in the market. And also at an intrinsic level, you have the long dated bonds in any economy's market is also the most reflective of how investors feel about the long-term performance of an economy. And so you also have that one where, not just through fiscal uncertainty, but the question is are investors just not that confident in the UK long-term period? And therefore you're seeing that move as well. So I do think that, yes, fiscal short-term issues are to blame, but when you look under the hood, I think there's actually several factors that are driving this move.
Yeah, no, definitely. And also, it is wise to point out that this is, a global phenomenon. I can't even say the word.
Phenomenon.
Phenomenon. Like we're seeing this all in very much developed markets, and it's definitely something to keep an eye on. But, the only saving grace for the UK is we're not doing as poorly as the French politically and fiscally. That's all I keep reminding myself.
Well,
you can always rely on the French to make you feel better about your own country.
Yeah. Politically, just before we came on the show, Angela Rayner has resigned as obviously deputy PM. So yeah, that's what I'm there. But I think see you later, sweetheart. If we play a little higher or lower segments.
Go on.
So the budget is provisionally in the diary for November 26th. Which is basically, what are we calling that?
Well, we'll still be celebrating my birthday at that point. I'm planning a week-long affair.
So basically, it's called just under 3 months to the budget. So the UK 30-year yield, as I'll pull it up, I believe it's 5.7 something percent. On budget day, so just before the budget comes out, do we think the 30-year is going to be higher or lower than where it is currently?
Oh, good question. I'm going to say higher.
Yeah, I was going to say higher. I think
we've had... Sorry, go on, Jesse, sorry.
I was just going to say, also just because it has pulled, although there was that spike earlier in the week, the long end has kind of pulled back over the past couple of days. So now at 5.55%, I reckon... got my phone. Probably
get excited.
Kind of a
talking about long-dated bond yields.
Yeah.
Go on, Jay, sorry.
I think higher from here.
And to be honest, I think Jesse needs to get out of my head, because his logic about we were very frothy and then we come off a bit, it feels like this is like just a momentary dip. Mine and Jesse's logic is exactly the same, which I guess for me is good, but for Jesse probably bad if I'm thinking the same as him.
And do we think in excess of 6%, or are we thinking this just grinds higher through till budget day, or do you think that we start to see a real sort of melt up, if you like?
I'm not sure if it will be above 6 by then. I think we'll be above 6 fairly soon after the budget, because I don't think it's going to be a very nice budget. But I do think it's going to be one of these that creeps high. I just can't see a way that this government's going to turn this around. And we've said a few times, like me and Michael Brown have said this a few times as well, that, this really sad and shocking and scary part of all this is the fact that who the hell replaces Rayner? Like, if she goes, like, if they decide, right, do you know what, we need a fresh start, who are they going to replace it with? Because everyone that's kind of, that you kind of would see as a viable alternative, if you're Labour, is worse than Rachel Reeves. And that's pretty scary. Which is why, I'm permanently bullish cable. I'm proud to be British, all this stuff, but I am genuinely fearful at the moment, and I would not want to be long UK PLC at the moment.
Agreed. Well, we'll revisit that in coming weeks.
November 27th.
I wanted to flip to, obviously, earnings season's still been in full flow. And interested to hear any particular stories you enjoyed this week. The one that really stood out to me, two companies. American Eagle and Lululemon. American Eagle obviously popped 25% higher in the pre-market after releasing their results Wednesday, and essentially they saw unprecedented levels of demand, impressions, etc., from obviously the Sydney Sweeney campaign.
Tit sell. I've told you that for years. Tit sell.
It does, and it really has done. And
No,
it's
mate,
one where,
I
like,
think in fact, I think it was you guys that posted, wasn't it? It really is that simple.
yeah, genuinely, yeah. And it speaks to what we put out, last week, basically a new thematic basket of basically marketing / going viral and companies that are doing it and companies that aren't. And American Eagle obviously has really, clearly benefited from that in the past quarter. And then you flip on the other side, Lululemon, who are down basically about 15% ahead of market opening today, because last night when they released their results, essentially it was the opposite story. They were like, they've got
No
no
tits.
creativity. Yeah, for keeping it that simple. They basically, they've just not really seen the demand from consumers.
Yeah.
Yes, they blame tariffs and a few of the bits and bobs, but when you boil it down, they've got the product people like, but they just, they need that spark. They need something to get them going.
Yeah. No, absolutely.
And the bottom line is, it really goes to highlight, I think, how powerful marketing campaigns, going viral, etc., is in the market right now.
No, definitely, absolutely. I could not agree with you more. I get just while we're talking about earnings, I think one that kind of flagged for me was Salesforce. We've seen, well, we've heard from the CEO in the weeks leading up to this that in this week that he's going on about AI, he's doing so much for Salesforce, etc. Now then he announced that he's laying off 4,000 employees at Salesforce because everything's been done by AI now. Well, so much. But then you're looking at that going, well, is this an AI story, or is they using AI as an excuse to lay off people? And then, then we saw the earnings and, the outlook and stuff. It wasn't that great. So I am kind of hesitant to say that, he's telling the truth and all these layoffs were because of AI. Part of me kind of thinks, do you know what? There's probably more going on under the hood and they just need to get rid of some people and cut headcount.
And for you, do you think that in the coming quarters, other companies will start to use AI efficiencies as a kind of, a cover up for wanting
Yes.
to cut headcount? Do you think
Yes.
that's going to be more
No,
of a theme?
absolutely, definitely. And I think there's a historical, what's the word, kind of comparison here, which was Brexit. There's a lot of companies that were not doing great before Brexit or over Brexit, and it was just a very, very easy thing to blame for when they needed to lay off employees. And I think we're seeing that with AI. It was actually, for me, on a Thursday night, quite adult in the fact that I went to LSEG at London Stock Exchange Group for a fintech event, and it was all about AI and stuff. So there's some very, very smart people hosting this. From very, very big companies. And they said, look, AI is great, but people, employees and firms they're not prepared to use it fully at the moment because there's so many, the landscape's moving so quickly. And also, every company's, they've ended up paying for, say, like 5, 6, 10, 12 different AI softwares because, they think that they need it. And then after 6 months, they said, actually, do you know what, it's not really moved the dial for us. We're going to cut it back. There's no ROI on it. But it does give them a great excuse to get rid of people. And I think we're going to see that more and more. But I do think in the financial sector specifically, I think the bar to replace people, even from a regulatory standpoint, is so high that I think it will be a long time before we see AI taking over roles, simply because the regulators and, the SEC, the FCA, et cetera, no one wants to take that risk of AI fucking up. And unfortunately, that you do get bad results. So putting too much power into AI for decision making and anything that involves personal data, etc. I do think we're a long way off that being utilised fully, but as you said, it makes a great excuse why you need to lay off people.
Yeah.
I almost sounded fairly intelligent then, and it's all a charade. Honestly, I'm not.
No, it's nice. I liked it. Yeah. And I think definitely though, on a slight pivot, but staying on AI, is that you're also I do think the investor sentiment is still very, not frothy, but very buoyant on
Yeah.
AI
Oh,
IPO still
absolutely.
coming through. Because
It feels like
CoreWeave was one big one recently.
It feels like every day we're hearing like someone else has raised another couple of billion, and you're like, what do these companies that you've never heard of that, I think someone did a stat, it's like 90 something % of the AI startups that have happened in the past like 2 years have ended up just fizzling out and going to zero.
Really?
Yeah, it's something stupid, like in terms of all these people like coming to market with an AI agent or agentic or whatever, all this stuff to solve problems. And it's great for the first kind of few months, people getting all frothy over it, and then just dwindles off and someone else is doing it better. One of my takeaways from last night's event, it was like 6 or 7 kind of AI startups specifically for fintech. And I was sitting there at the back of the room, because obviously that's where all cool kids sit. And I was like, yeah, I could literally, well, I couldn't, but I could get someone to make an AI, like some agentic kind of software that basically did all the 6 things, all the 7 things that these firms are doing, all in one basket. And I think we're going to see a lot of that. I think we're going to see a lot of consolidation in the space, because we have to, right?
Yeah, agreed. Let's flip to the big news, to end the week, which actually I thought was pretty evident. I was surprised trading was, actually that we saw as big of a move higher yesterday in equities, considering that we have payrolls out today. But yeah, payrolls and jobs data are going to dominate obviously the end of the week and arguably into next week as well. And yeah, I mean, for anyone obviously listening, live or ahead of the print, you don't know what's happened. But yeah, like headline number 2 in at 75k, unemployment rate expected to tick slightly higher to 4.3, and yeah, average hourly earnings expected to tick slightly higher as well. So like a mixed bag. I think the big focus is going to be on the unemployment rate. I think that's where people are going to sort of focus on. The only thing I would say is that to me, it feels like the sentiment going into the print has been very negative.
Very dire. Actually,
very
just
dire.
on this, someone, I can't remember who, posted a stat yesterday, the day before, about the kind of the estimate and the range of estimates is the lowest it's been in, I want to say 10 years. No, not maybe, no, it can't be that long, but like literally for a long time if you exclude COVID, which just shows you like, the surprise will be higher. I think no one's really expecting big numbers. But one thing I will add, just purely because it is my soapbox of choice at the moment, is I've stood by the fact that I really believe ADP data, which obviously came out yesterday, is far superior to BLS and FP. I get laughed at, and the reason I say it, and the reason why no one wants to accept it, is because everyone's been brainwashed into believing that NFP is the mother of all data. Everyone says, "Oh, ignore ADP. It doesn't really matter. It's all made up." But the fact is, one, who would you rather trust? Would you trust a public company whose job it is to get this right, and also whose payroll data goes through their data? It's driven purely by the real payrolls, or would you rather believe a government agency that is trying to gather all this data that also has to revise it monthly, every 6 months and yearly to the tune of millions of people? They like the whole point of revisions is because they know it's not accurate. So again, you can't trade. You're not going to do a day trade on the back of it. But I do think if we want to take a more thematic look at the economy, I stand by the fact that ADP is far more reliable. Michael Brown, used to laugh at me for saying it. He posted a good tweet yesterday where, because I keep going on about it, he called up ADP versus NFP post revisions. So, when the data is more accurate, and ADP is, basically the NFP data gets revised down far closer to ADP where they were on the initial release. Which, that's my soapbox and I'm sticking with it. NFP is the worst economic figure to trade and to benchmark, in my opinion, out of all of them. Actually, maybe PMIs, because I hate PMIs.
No, I did put ADP asterisk, let Ryan talk. So yeah, I'm glad you brought exactly what I wanted you to talk about.
Am I that predictable?
Yeah, you're perfect. But I suppose the additional question on from there then is obviously ADP yesterday wasn't great either, was it? 54,000 below expectation. So off the back of that, though, my thing is
just be clear, it was 54,000, which was below expectation. It wasn't 54,000 below expectation.
Sorry, yes, correct. Yes.
Let's be very clear.
The slight addition of or minus of a word can make a huge difference. And And so on the basis of that, though, are you sticking to your guns that then NFPs today is going to be a poor figure and the overall report is going to be poor and therefore backing up what the market expects? Or do you think that the ADP print still means that people are slightly too bearish going into the print this afternoon?
I personally, I'll be shocked if it's a decent number. It's one of those figures that you could tell me, me and you and Jesse could be leaked the data now, and we could potentially still lose money when the figure comes out. I think there's so much positioning built around this. One thing I will say is this will not move the dial at all for the September rate cut. Like, I genuinely believe it could be, the number could be 0 and they're still going to cut 25. It could be 200 and they're still going to cut 25. As a dear friend Brent posted earlier on, which I retweeted, the key market to watch will be the chances, the deck odds, basically, the DEX offer for where we go on that, because that will be more likely to be impacted by these numbers.
Yeah. No, I agree with you on that. Any time that basically a print is basically nailed on, it's basically 97% for September, is whenever you see gets that close to being fully priced, it's going to be very hard to, meaningfully move that needle. Jay, you want to chip in?
Yeah, so kind of echoing Ryan's thoughts about like the quality of data. I think there's probably not going to be a huge movement today because of this whole like NFP versus ADP debate. Also, if you think back to September last year, the labour market weakness was a bit of a shock, and then the Fed had to like ramp things up. But now like, everyone's already pricing rate cuts. So I think it's more of a story towards the end of the year. Do we find out that the Fed had been too slow on the labour market? Or was they okay? I think this print is just a number.
I could not agree with Jesse more. Again, I'm sorry, Jesse, that I agree with you so much. It's normally a bad sign. I apologise for that. But like you said, I could not agree with you more. And also, like, we had that message from Trump saying the real number comes a year from now. So, Trump's had an early look at this figure. So potentially it could be even worse than what we're expecting.
Yeah, can the president access that data early?
I do believe, if I remember correctly, they do get an early look. Really? I think this came out I believe it was either Trump's first term or Biden's term. Something happened, and it was basically, then it was made very clear that they do get an early look. Someone will need to confirm that for me, because I was probably hungover when I heard it. But yeah, I'm pretty sure they get an early look. Or it might be someone gets an early look.
Yeah. Okay, interesting. Yeah.
But if someone can find out and tell me if I'm talking, if someone can find out and tell me if I'm talking bollocks or not, that would be greatly appreciated.
Oh, good. Wonderful. Those were the main points I wanted to run through this week. I don't know if anyone's got anything else.
I've got it. Go on, Jesse. Sorry.
I was just going to say a short point, because it only came out about an hour or so ago. But did you hear about Elon Musk's pay package just been announced by Tesla?
I saw a tweet, something about it, but go on. I know zero details on this, so go on. Blow my mind.
Basically, in short, it's he'll get rewarded $1 trillion if they reach 8 trillion market cap by like 2030. I can't remember what the day was, the year, but basically, $1 trillion awarded to Musk over the next couple of years. Tesla's up in pre-market.
If they hit 8 trillion market cap.
It's not, as we all know, it's very, very rare. I'm lost for words, but I just do not know what to say about that. And if anyone wonders why he keeps talking about, robo taxis coming yesterday and a gazillion users and stuff, this is why. It's his job now to pump the stock price by any means possible. And you know what? I would do it if it was if it was my company, I'd be doing it for a lot less than $1 trillion. To give you a clue. But that's that, Jesse. That is mind blowing, right?
Yeah. The one thing about Musk, like, I know Tesla goes up and down with kind of their
most markets do, mate. They're not door numbers.
But like Musk is very like reminiscent of like Steve Jobs, how he could like sell a vision and a narrative and people buy into it. That is probably one thing that Musk has, that he could push Tesla to 8 trillion down the line.
But I think the difference being though, is that at least, Steve Jobs, etc. At least they just weren't talking bollocks. Like it wasn't obvious lies.
It was
whereas
Elon Musk,
Elon Musk genuinely just talks bollocks.
I mean, do you know what? I'd be interested. My initial thought is that, and he's probably already started to work backwards on this, is that, okay, you've got the 8 trillion market cap, and then basically you break that down and you say, okay, what does that look like in terms of, how many robo-taxis have to be on the streets, or, how many humanoid robots have to be on the house,
One in
or,
every
you know what I
home.
mean? Then you basically, like you work it backwards, and I'd be very interested. I mean, I might try and do it myself, but to work it backwards and say, like, how realistic is, what level of capacity or adoption do Tesla's cars, taxis, whatever, need to be at to be able to generate an EPS that has a reasonable multiple to get the market cap to 8 trillion? That'd be quite interesting to look at.
The scary thing is that you really can't bet against him. Like, but I said, look, I think it's a ridiculous target and a ridiculous payout. But this is Elon Musk, so anything's possible.
Beers on him, eh?
Well, mate, yeah, he knows where to find me on a Friday. I'll give you a clue.
Yeah, yeah.
Bring your wallet, son.
Good one to finish off on, Jay. That's
That is a
I like
really.
that.
I'll be honest. That's all I'm going to think about for the rest of the day now. Jesus, but no, very well done, Jesse. Very well done. Awesome. Well, guys, thank you so much as always for what was a great chat. And apologies if I did do a bit of a rant on ADP, but it is the best way to judge US employment. Anyway, but guys, thank you so much, listeners. Thank you so much for tuning in, especially you guys that listen to this live. We do appreciate the effort. As I always say, do follow the guys. Do subscribe to their Substack. It is phenomenal content. And whatever you're doing, keep it tight, stay safe, have a wonderful weekend, and we'll see you all next week. Much love.
And see you
Bye.
later.